Hey guys, Brian and Joanna over here with Mortgage Shops. Listen, if you like the information that we're bringing you, do us a favor, share it on all your social sites. One, it's going to help you, but it also helps us. And remember, whenever you get engagement, go ahead and have a conversation with folks. That's how you're going to get your business to improve, even marginally. Share the video, that helps us, guys. Okay, did you know that investors now represent 30% of all purchases of single-family residences? You know, all of these overpriced houses that are on the market right now that nobody really wants to buy. Well, investors do, because you want to know who doesn't care about property values? Investors. Now, why is that? Well, here's the thing. They're going to hold on to those investments, and real estate always pays over a long enough period of time. Oh, and not to mention the simple fact that upon acquisition, that's the most expensive that property is ever going to cost that investor. You see, inflation makes the fixed payment cheaper, doesn't it? Over time, a rate and term refinance is going to make that payment cheaper, right? And the absolute certainty that rents always increase, which of course offsets the payment and will eventually, if not immediately, surpass the payment, making that overpriced property one hell of an investment.
As of December 2023, CoreLogic reported that investors bought almost 29% of all single-family residences. That figure is projected to exceed 30% in 2024. Now, the Federal Reserve has hiked interest rates 11 times since March 2022 to control post-COVID inflation. One ugly outcome of this has been stubbornly high mortgage interest rates, which has deterred some hopeful borrowers from entering into the market. In turn, this has fueled demand for rentals, and investors are taking advantage.
You guys, you all need to tell your clients this, lenders and realtors alike. If you don't buy that house because it's too expensive, just remember that you can always rent it down the road, because there's a good chance that an investor is going to be the person who buys the house when you don't. Sure, your payment might be a little less than the alternative mortgage if you were to buy that place, but that's only temporary, because we know your rates on that rent are always going to go in one direction, and that's up.
Here's a graph of rent rates nationally. You might think, great, rents have come back down, but you'd be wrong. This is a graph of how much rents go up or down every year. So let's put our break-even point on this graph.
Okay, so that's the red bar that's right in the middle. Anything above that red bar is how much rents went up in that given year. When it appears that rents are going down as the graph is going down, they're not. They're just not going up as much as they had in the previous year. That is, of course, as long as everything stays above that red bar, and it generally always does. Here's the thing. You see, according to this graph, rents aren't down. They're up 3.4% this year. They're just not up as much as they were the previous year. Moving on.
Existing home sales fell back 4.3% in March to an annualized pace of 4.19 million. And that's in line with Fannie's expectations. While Fannie Mae expects home sales to remain sluggish going forward, the flow of new listings has remained steady in recent months despite generally rising mortgage interest rates, suggesting that additional sizable sales declines are unlikely. Now, why is that?
Let's just put this in plain terms, and it's pretty simple. If you check out this graph, as it pertains to new homes, the red line is new housing starts, homes they're building. The blue line is new housing sales. So as long as housing starts exceed housing sales, we're going to grow our inventory, right? When housing sales exceed housing starts, well, our inventory is on the decline. Or as long as that blue line stays above the red line, we end that month with positive inventory growth, and that's good, and that's where we find ourselves right now. Now, of course, if you're looking at this graph, it appears that in the months to come, these lines are going to converge once again and sales will outclip starts. However, until that happens, just remember this, guys, we are currently in a positive or inventory growth pattern, and this is good for our business.
Finally, with all these numbers, with sales, with rentals, and starts, and all of this, here's the question. What do we want? What is a normal market? What's a healthy market, and how do we get there?
Aha, and that is a great question. So let's check out this graph. Everybody likes a graph. The line in the middle is deemed a normal housing market by Freddie Mac standards. Anything above the line is a surplus. Anything below the line is a deficiency. The blue bars represent rentals, and the tan lines, they represent homes for sales. Now, this one's a no-brainer. Everything, it turns out, left of that vertical red bar in the middle is a surplus of inventory, both rental and for sale. Now, of course, that's when all of our housing expenses go down with a surplus. Anything to the right, well, that's a deficiency. They're all below, right? And of course, in this market, our housing costs, they go up. Now, what I see with this whole thing, guys, it's really pretty simple. Our total housing deficiency is about 1.5 million units, which isn't as bad as I thought it was, frankly. However, I also see a long way to go. And what this tells me is this: get used to this market that we're in right now. We're going to have more opportunities in the future, but if we're looking for a gilded, golden era of production, understand it's really not in the cards, at least in our immediate future. Learn how to sell and succeed in this market. It's not only possible, but for the astute, hardworking, and really disciplined loan officer and realtor out there, it's probable. The biggest hang-up for anybody's failures in this market or even good markets is what it's always been. It's going to be your mindset, guys. We got to make that a little better. I hope this helps. You guys have a great day, and we will catch you manana.